Hey folks, this episode is sponsored by City Traders Imperium. Now, what you might not know is CTI has the best funded account conditions up to $2 million, which is the most in the industry. Now, go check out the video I recorded with them to learn more about their incredible package where Trading Nut listeners get an exclusive deal. It includes access to their high-performance trader mastermind and funding program. What are you waiting for? Click the link in the description below or above and go check out that video. Hey folks, Cam Hawkins here from Trading Nut. Welcome to the second part of a two-part video series with Matthew Todd, a Forex trader from Scotland. Now, he breaks down market structure, how he sees market structure in the first video from a theoretical point of view. Now, if you do want to watch that before watching this, which I do recommend, there is a link up here in the card. So click on that little dot in the top and you should get access to that video. So watch that first if you want the full picture of how he does it. If not, if you just want to see how he applies it to a price chart, then keep watching and let's get on with it. Here we go.
Now, as I've said already, GJ is pretty much range bound this week. And I think what I had marked in was these two areas right here. So there's no structure. And I guess whilst I'm on the topic of a range, this is what I've been saying for the last few days on stream, which isn't relevant to what we're doing today on the call, but it's just a bit of extra information, is see when price is ranging or it's in consolidation. Structure doesn't matter. Trend lines don't matter. Fibonacci doesn't matter. Indicators don't matter. Nothing matters apart from the range. All right. The range holds the priority. You know, trying to work out what your structure is inside here, it's pointless for myself and the rest of the guys this week. We've not even touched GJ. We've had about 4, 5, maybe even 6 structure flips inside the 1 week on the 30-minute time frame, for example. And that's just not, it's not really normal, to be quite honest with you. We've got structure flips that happened over here. Then we flipped again above here, flipped again below here. So there's too many flips in there. Structure and trends, they obviously work in trending markets, not consolidating ones. So my advice would be, if you're trying to work out structure within a range, let it break the range. All right, let it break above or below the range first, and then just go back to the whole, where's the lowest point, where's the highest point. All right, so we can avoid that for now. And what we'll do is we'll just bounce across. Don't want to use 30, maybe use 4. Otherwise, I'll be there for a while if I'm using the 30. We can start on daily. We'll start on daily. And again, just go to a random point where I can see some transitions. And just walk, as I say, I'm just going to walk through. I'm not going to go through anything too in depth. I usually go back to like this point because it shows like really, really good examples. And it will take 2 seconds to walk through because I'm not going to dive into each candle and all that nonsense. I'm just going to go through the structure and it's as easy as that. So if we look at, for example, let's talk about this area here. All right, so we can talk about this area here, which we can see is in a clear downtrend. Okay, it's very simple. Now, I think this was this big spike at the start of the year. Doesn't really matter too much. Like, don't stress about it. Let's just define it as the low or define this as the low. Again, doesn't matter too much. And we need to see where that leg came from. Okay, now this is going to be a bit of extra information. See when we were talking about the structure when it looks like this, right? See these little pullbacks. Okay, see these pullbacks here. As I say, it's a bit of extra information, but for a pullback to occur, in my opinion, in my way of trading, it can't just be one candle, okay? It can't just be one candle that creates a pullback on whatever time frame you're analyzing the structure on, right? It needs to be at least 2 candles moving in the opposite direction to the trend, all right? 2 consecutive candles. So this is a bullish trend. I'm looking for 2 bearish candles, one after the other, to at least say this is a correction. Anything else, in my opinion, is just a pause. All right, it's just a pause in the trend, like this, for example. This isn't really a correction. It's just a pause. You know, we didn't really pull back or anything like that. It's just a stall in momentum, and then up we go. Okay, so just to take note, in case you guys think I'm missing out any pullbacks. Okay, I'm not. I'm just going with the 2 candle theory. So, as I say, lowest point of the trend, where did the move come from? Right here, because there's no 2 candles in the opposite direction here. It's just the one, so it's just little pauses. Therefore, this is the leg down. All right, simple as that. So we know the price is going to remain bearish until we close above this level. So then we've got all of our pullback in here. There we go. We've closed above that level. So that has now flipped the daily structure. All right, daily structure is now bullish. Okay, so this no longer is the lowest point of the downtrend. This here is now the highest point of the uptrend. Okay, and again, by looking at the leg, we can clearly see that there are no pullbacks. All right, I sometimes like to say if it looks like a swing, it probably is. But for the sake of this education, let's just go with the 2 consecutive pullback and then go from there. All right, so obviously you can see this looks like a bit of a swing, but they're not consecutive. So therefore, we must use this low, and this here is one leg. So we know that we're now in bullish territory. We've closed above the last significant lower high of the downtrend. We're now bullish. Okay, so we're in a bullish trend on daily. And as long as we remain above this level, we're bullish. Okay, and again, like I spoke about in the example, everything in here is completely irrelevant until we start getting above. Simple as that. So here we go. There's another leg up. Here's our new high. Got a new high up here. So again, we've now got the newest point or the highest point of the uptrend. Where did that push come from? Right here. We're not using this because it's only one candle creating a pause. So instead, we're using down here because this is the leg. This is where it really began. Okay. So again, I'll just remove this to clean it up a little bit. And again, we're basically saying that everything inside here becomes irrelevant because we're still technically in a bullish trend. Now, again, a little bit of education I didn't expect to run into, but just quickly, this high here is equal to this high here. Even though the wicks are closing up, are getting above this high at this point to the left, that doesn't make it the higher high. Okay, it needs to close above. The same way when we create new highs, it needs to close above. So whilst people might say that this is a higher high and then this is your last significant high or low, that's not the case. It's an equal high. It failed to close above, it tapped above, but closed inside this area. Okay, so because it closed inside this area, it's considered an equal high. And if we've got equal highs, what we always do is use the first high. Use the first one of the equal highs. It could have bounced here again, bounced here again, bounced here again. We're always using the first, and that's when you get the transition. Okay, so we know, again, this is still our highest point. Structure will flip as we get below this level, and that is it. So we're still bullish, and then again, you can see down here, there's your structure flip. Very easy. Okay, we've created new lows, we've closed below these levels, created a pullback, and down we go. Okay, so I'm going to speed up a little bit now, instead of talking about every single flip. But now we've got, again, new low. Where did the leg come from? Right here, bearish below that level. Pullback, new low. All right, newest low of the downtrend. Where did the leg come from? Right here, bearish below that level. Okay, we now must close below this wick to form a new low. We didn't do it here. We didn't actually close below this wick, but we did down here. Okay, so again, new low. Where did the leg come from? Right here. So again, structure is bearish as long as we respect that level right here. Okay, again, there we go. Again, pull back, respected this level. Down we go. We've created new lows. Okay, we've created new lows down at this level. So structure will now remain bearish until we close above this point. Okay, because this is such a steep drop. Now, albeit, right, you're going to get your 4-hour structures, your 30-minute structures flipping bullish in here, right? We know that. This is just a daily example. So it doesn't mean you can't take buys based on these ideas. I think we actually caught buys above here. But what I'm meaning is on the daily, your daily bias is still going to be sells until we close above this level. Okay, until we close above that, your daily bias is still downside. Okay, just so nobody gets confused and says, what if we want to take this move? Okay, but remember, it's just about the structure, playing by the rules, and you'll see the consistency start to prevail. Okay, so again, equal low. So we don't use the first, we don't use the second. We always use the first. And even though the first would have been great, right? I see it. I know what you guys are screaming out: double bottom, neckline, all of that nonsense, But we always use the first. We must be strict. So again, we need to get above this level. We've not managed to do it here. We've not managed to close above it. It looks almost like we've just tapped it and rejected. So sales based on your daily structure would actually have been quite good in here and at this point. But you can see this bullish candle right here has now finally closed above that level. So we are now in bullish territory. Where did the leg come from? Very simple, right here. So up we go. And then this becomes your last significant higher low of what is now an uptrending market. Okay. And then again, same idea. We're going up to create new highs, same leg, same structure. Okay. Then it's range bound. This is a very similar scenario to what we're in right now on GJ, to be honest. But again, it's irrelevant information. Whilst you're in a range, you're still in bullish market structure. You're not creating any highs, you're not creating any new lows. Doesn't really matter too much, but you're still bullish. And only at this point here do we actually go up and close above your highest point. This is your wick right here. Only at this point do we really close above it.
Now, you might already know the boundaries of trading are expanding faster than ever, but what you may not know is that there's still time to take advantage of these opportunities. With my sponsor, Sage Strategies, you can instantly get access to institutional grade algorithms built on the back of decades of professional fund management experience. This means their systems are robustly tested, risk managed, and rigorously informed by their team of experts. Go and check them out at sagestrategies.io or click the link in the description.
So great, now we've got a new high. So whilst we have a new high, we must identify where the low is, which again looks like a swing, but we're using the 2 consecutive candles in the opposite direction. We don't have that, so your leg is here. Okay, again, you can see we went on to create a higher high. It's the same theory. Okay, same idea. It's still this level, right? It's still that level on the basis that you're using the 2 candle rule. If you want to use the basis of if it looks like a swing, it's a swing. Crack on, you do that. I think it's just easier to use the 2 candle rule. And again, you know that you're in bullish territory until we get below here. Okay, moving over to the left hand side now, and this is where, funnily enough, this is where we were in bearish structure pretty much for a year actually, because you can see, and I think on maybe FXCM, you can see I use forex.com, but on FXCM there's like a 2 candle pullback in here, or there's like 1 in here. But forex.com only has the 1 candle pullback. So if you're saying, or what we're saying, based on the structure, that as soon as we close below this level and create a move down, the structure is bearish, and then this is your leg, right? This is where the leg essentially came from. And this whole move down here is your leg, right? That whole move down. And it was very difficult, right? Like, to be fair, for the whole year, it was tough because we were saying, guys, the daily bias is in sales, it is in selling territory. You know, it doesn't mean we can't take buys, because I mean, don't worry about that. We got a lot of buys in there because of our other time frames, but that's just the way that it worked. And I think that was actually like as COVID was coming in, so there was a lot of uncertainty. So a lot of money started flowing into like the Swiss franc, you know, the Japanese yen. So we were obviously getting a lot of these safe haven currencies strengthening. So that's why we got such a big drop. Just bear in mind that it is only the daily structure at the end of the day. So we're still using weekly, 4 hour and 30 minute. And I'll talk to you about that just after I do this. So kind of, you can argue that everything in here is irrelevant. Now, we've not spoke about micro trends, which I forgot to do on the little example. I'll try and squeeze it in quickly. But essentially, that's what you're saying. You're still in bearish territory inside here. But it's this, again, the same theory applies even at current price. You know, I believe the only time frame I had at the start of this week as bullish was the daily, because it's quite clear to see we're above all that nonsense now. And this is our new high. This is like the highest point of our daily uptrending market, right? And then this is your pullback. So this is where your leg came from. So we know that the daily structure on GJ is actually still bullish, even though we're in a bit of a range at the moment on the smaller time frames. You know, this is kind of where I'm saying I don't want to get involved at all. We're still technically in bullish territory as long as we respect this level. And what my intuition is telling me, to be honest, and again, it's not to be taken in stone, but the last time we did something similar like this on GJ, when the structure was bullish, I think it was last summer, as we broke out of a 4 hour range to the downside, and it actually respected the last significant higher low, and then flew all the way back through the range. And what breaking below did is it triggered a lot of sellers. It triggered a lot of people to come into sales. But in actual fact, whilst the daily structure remained bullish, it ended up continuing breaking back through the range. So I do feel like that has the potential to happen again, but I suppose we'll just wait and see. But in terms of your structure, that's pretty much how it applies. And that same idea of respecting the last significant higher low happened only towards the end of March. You can see when we're in this uptrend, this was our highest point. Here's your 2 candle pullback. This is just your pause. So your 2 candle pullback is at this level right here, right? So this is pretty much where, if you get below this level, your structure is going to flip. And you can actually see, I think it was around 148.50, yeah, more or less, that price respected and then went up to make a new high. So in actual fact, this is a good example of structure. Whilst a lot of people might start be looking at, little downtrends here on like 4 hour or whatnot, we're actually remaining in a bullish trend because we're respecting that last significant higher low. So until that breaks, we stay bullish. And that's, again, something that could happen here if we break through the consolidation to come down and then start to flip back up. But the daily will, as I say, remain bullish until we do start to get below that level. So that's just a walkthrough on structure. I did it on the daily because if I did it on 30, we'd be here for about 5 hours, to be honest. The 30 is really good and it is really clean, but it's only because I didn't want to use the 30 based on this week's price action because it's in a range, so it wouldn't really benefit anybody that much.
You talked about going down to like lower timeframes, or what if you had conflicting trends on timeframes? Do you want to quickly go over how that works?
Mm-hmm. So what I do is, and this is when it comes down to the directional bias. So we spoke about the structure first, and that's how I read structure on my daily 4 hour and 30. But now what we'll do is we'll talk about the directional bias, and that's, again, pretty quick. I can just do a full breakdown on that, and it's a lot of the ideas are on my channel. It's just a Sunday webinar, right? I basically do a full analysis on GJ or gold or something, and it is exactly how I analyze a chart every day, every week, every month. This is how I do it, and it picks out what my directional bias is. So what I start by doing is, because I'm a day trader, right? I'm not trading swing. I don't need to look too far, too far back to work out what I want to do. I'm only looking for like 10, 15, 20 pips a day, but I still like to be on the right side. And I feel like having a directional bias in terms of what the overall move suggests is your best way of putting yourself in the best possible position to win. Take trades that have high probabilities, take trades that are on the same side as the structure and the trend and the bias. And it's that old cliche, like the trend is your friend crap that everyone says but doesn't follow. It is true. It really is true. Trading with the trend, trading with the structure, it's putting you in the best possible position to win. So what I do when I'm looking at my bias, all right, and look at it as like a tug of war, right? You've got 4 guys, 2 at one side of the rope, 2 at the other side of the rope. Who's going to win, right? You've got 3 at one side, 1 at the other. Who's going to win? That's kind of what I do with the time frames. Okay, now I do it based on weekly, and then I work my way down to like daily structure, 4 hours. So with the weekly, this is where I start. This is how I gain a bias. Is I look at the previous week's candle. Okay, the previous week's candle is what I look at. And I'm not looking at the structure on weekly. So we've discussed structure. I don't look at that on weekly because that's just, it's just pointless, right? You're talking like 600, 700 pips worth of information. I don't need it. So all I do is I look at the weekly candle of last week, because what that's going to do is give me a little bit of an idea of the direction from last week, but not only the direction, the momentum of that direction. So that's what I'm looking for in the weekly candle. So I think everybody will agree that this is a bearish candle, and it's pretty strong in its momentum or volume or however you want to say it. So I ask myself, is this candle strong bullish, strong bearish, weak bullish, weak bearish, or a doji candle? It's going to be one of those 5 things. All right. Again, it's not if, buts, or maybes. It's going to be one of those 5 things. And in this scenario, previous week's candle is strong bearish. Okay, so we already know that the candle's bearish and it's got downside momentum. So we know the direction of last week was very strong to the downside. That is it. That's all I want to know. Jumping onto the daily, and that's when we're doing our structure, right? That's when we're doing what is the trend? Okay, now we know that the daily has a bullish trend at the moment. We've just discussed that. So we've got the weekly is bearish, We've got the daily is bullish. And on the daily, we're not looking at candles. We're not looking at anything like that yet. We're just trying to determine a bias first. So daily structure being bullish, 4-hour structure, we're looking to work that out as well. And I believe the 4-hour structure is actually bearish at this moment in time, because we can identify that this is your high, this is equal. So we're using the first one. And the last pullback that were actually 2 candles was here. Right at this point. So only at that point, when the 4-hour broke below that level, did the structure flip. If you think these are swings, then okay. But if we're, again, just following that 2 candle theory, this is your last significant higher low. All right, and again, you can see at this point, we've got that close below, little tap back, and down we go. And now we're into the range. Now, whilst we're in the range, it's very hard to work out structure on those smaller time frames, but it doesn't change the fact that we're still bearish.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description.
Okay, now we can argue that this is the lowest point, or whatever you want to say. I would say that this is your lowest point, but only if this area actually closed below this wick. Because I use something like this. This is what I'm talking about here. This whole area is the lowest point. So I'm drawing from the closes down to the wick, and I'm extending that across. Majority of the time, it's going to just look something like this. It's just going to be like a small wick, something like that. The zone's not going to be huge. In this scenario, it's pretty big. I'm not sure why that wick is there. It makes it a little bit messier, but again, I'm just following the rules, following the plan. So we know that if this is the lowest point, we must find where that leg came from. And the unfortunate scenario here is that these aren't necessarily pullbacks. These are just pauses, okay? Which means that your trend is really going to flip over here. So only when we get back above the high is when the 4-hour is going to flip. Unless we break the low first with my idea. What I'm thinking is, because we're bearish, we're going to break below the low of the range to come down here. This is your last significant higher low on daily. And if this is now going to be a new low on 4-hour, this is going to be your leg that created it. Therefore, your last significant lower high, right? So then you don't need to wait for price to get back above there. You're waiting for price to get above here. And that's when your trend's going to start to transition again. So at the moment, the 4-hour time frame is bearish in its structure, all right, in its trend. And then lastly, I go down to the 30-minute and I do the exact same thing. Jump down onto that 30-minute, and you're looking at the structure. Now that's the problem, because this is a bit of a mess, all right? It's in that 4-hour range, so structure's chopping and changing. But like I said earlier, the range is the priority when you're looking at something like this, especially on these smaller time frames. I think we can identify this point is the low, and then this is kind of like your push, all right? Because this isn't really a pullback, it's only one candle. So again, once we get above this level here, we're bullish. There you go, we're bullish, up we go. Here's your new high. Last significant higher low is at this point here. That will only flip once we close below it. Here we go, close below it. There's your last significant lower high here. This is where the push came from. So until we close above that level, we're bullish. And I think we just closed above it here. So again, here's your new high, last significant higher low, because this is where the push came from. As soon as we close below this level, we're bearish. Close below, there's your retest, and down we go, okay? So it's one of those things where it's like chopping and changing quite a lot, but it's only because we're in that range. So 30-minute structure doesn't work well when you're in like a daily and a 4-hour range. It will chop and change quite a lot. If I'm looking at this, just to work out, again, the bias, right? So this is my low. Structures flip bullish up here. This is the push. Structures flip bearish again. At the moment, 30-minute structure is actually bearish. We're in selling territory, and the reason behind that is because this is your high, this is your low. We broke above structure at this level. You can see these little 2 candle pullbacks. Okay, we closed above it here. Pull back, created a new high. This is the leg that done it. So as long as we stay above that level, we're bullish. We didn't. We closed bearish. All right. Created a new low, and now this is our last significant lower high. right? This is where the push came from, inside or downtrend. So again, everything in here is irrelevant unless we create a new high to flip the trend. So we're actually still bearish on the 30-minute. So if we go back to square one, we've said the weekly, bearish, daily, bullish, 4-hour, and 30-minute both bearish, which means we have 3 versus 1 selling bias. Okay, it's very, very simple. Imagine 3 guys at the end of a rope and 1 guy at the other end of the rope. Who's going to win the fight? Who's more likely to win that battle? It's probably going to be the 3 guys, right? And that's literally how I look at the market. So I know that I'm looking for sales. It's as simple as that. So being able to work out all my bias, all my direction, and understand, okay, I know that I want to look for sales right now. And then that's when you start looking at your daily candles, your 4-hour candles, candlesticks in general, support, resistance, clean ranges. If you use trend lines, crack on. I don't. If you use fibs, crack, whatever it is. But at least you now know at this point, I'm looking to sell. I want to sell it at this moment in time. And it's that easy. I do it every single week. I do it every single day. Just reassess to understand which way I want to trade. And I feel like that's what people struggle with the most. I feel like people come to the charts not really knowing what they want to do. You know, they don't have a bias. They don't have a clue about which is the most probable side of the market to be on today. And that's why people tend to take a lot of losses or get FOMO and all of that sort of stuff. So as I say, that's how I break it down. That's how I do my structure on all my time frames. That's how I do my bias with the 2v2 or 3v1 or whatever it may be. And that, for the most part, will keep me on the winning side of the market the majority of the time, like without a doubt.
Yeah, look, it's probably one of the best explanations of working out market structure I've seen in all the videos that I've seen. So really, really thorough, detailed, mechanical. I absolutely love it. So guys, I hope you enjoyed that, and I hope you really sort of took something away from it and jumping into your charts now and basically working it out for yourself, especially if you don't know how to read market structure. So look, Matthew, once again, thank you very much for coming back on the show. This has been fascinating, an awesome run through, a great little mini course here for you guys. Do you want to let the guys know how they can find out more about you?
Yeah, I mean, we're on YouTube. That's probably the best place. We do the London live streams every morning from 7:30 till 10 a.m. That's UK time. So it's just youtube.com/Todd Capital Group. We're also on Instagram, but again, you'll find all the information about us on the YouTube channel. That's probably the best place to go. And we're pretty much there daily for 2.5 to 3 hours, Monday to Thursday. So people can come and ask questions about things that they've maybe seen in these videos. You can ask them live and get like real-time answers and stuff like that. So that's probably the best bet to get in touch with us.
Awesome. Well, look, guys, we did actually shoot a podcast and another video with Matthew ages ago. So if you do want to check that out, I'll leave a link below this video as well, and there'll be links to all that stuff on there. And also do remember to hit subscribe, hit like, and do click the bell and click all if you want to get videos like this sent to your phone in the future. And we'll see you in the next one.